So what's up, Investor Nation? Today's a really special day for iFund Cities. We get the opportunity to interview one-on-one with Tina, our marketing director, about a topic that for 7 years we've kind of neglected, and that's raising capital. So my name's Ryan Herting. I'm the CEO and founder of iFund Cities. We are a large private credit fund in the real estate space, and we've largely rolled 100% of our retained earnings back into the business to grow. And today's a new age in which we're out talking to retail investors about private credit, why they should look at it as an alternative investment, and why iFund Cities could be their trusted partner of choice. And so with that, I'll kick it over to Tina, and she can talk to me and quiz me a little bit about, what's going on in the private credit landscape.
Yeah, thanks, Ryan. So if we're going to ask people to trust us with their money, we want to just inform them a little bit about why investing with IFC is such a great idea. So why does this investing feel different than traditional investing? We hear so much about people using the stock market and such. What would you tell somebody if they wanted to know a little bit more what differentiates this from traditional investing?
Yeah, so private credit's been around for some time. It's now the buzzword, right, Tina, that everybody's talking about. And you get some big institutions, you get some small institutions. I think what's unique about iFund Cities is we started in 2018. We've seen the COVID credit cycle. We've seen kind of a unique market sentiment and credit cycles that are fast and a lot of blips, a lot of changes in administration, a lot of abnormality in the market. And through all that, we've been able to make every single payment, have great performance across 2 billion loans originated throughout the Mid-Atlantic and Southeast. And we went from a one-man band, me, all the way up to a 92-person team, a $200 million capital stack, and working with some of the largest and brightest minds on capital markets on the street. And I think that's really important when you're looking at a sponsor and the quality. And I think the reason private credit is taking hold is it's relatively uncorrelated to your stocks and bonds or your strategy on kind of traditional diversified investing. And it also allows you some of the unique characteristics of real estate investing, but without the active management of being either a landlord or taking the equity risk in a capital stack. So it allows you exposure to real estate, uncorrelated to the market, great returns commensurate with the yield, and backed by real assets. So I think that's what makes kind of iFund Cities proven sponsor, and then the asset class of real estate private credit unique for a borrower, especially if they're aging out and they're looking for more of that kind of consistent, steady, fixed income returns.
So you would call this a passive investment, more or less, or what would you tell somebody?
So active on our side from a strategy, because we're actively originating loans, we're actively asset managing the portfolio and capital. But for a retail investor, you or me, making an investment in iFund Cities, it's a very passive investment with the same exposure and the same returns that you get being an active landlord.
Sure.
But without the headaches, so you get your time back.
This is great for anybody who wants their time, I'm sure, as soon as they're retiring.
Yes, we're in the business of giving your time back and protecting your assets.
Exactly. So what if somebody wanted to invest, what do you feel like their experience would be to start? And how soon would they see returns? Like, what can they kind of paint the picture of how an investor would feel if they're like, maybe even how they would get started, and then once they're in the process, what happens?
Sure. So I think the first step is to learn more about us, and we have some decks and materials, PPM, subscription agreement, one-on-one time, so I can get to know you, your business, your investment goals. That's how you'd start, with the consultation, understanding more about our business and us understanding your investment goals. One of the things that was really important to us when we started this business, because we had very limited money at the time and we put it all in, was that we had returns immediately. And so most of our deals are structured as senior debt backed by real estate assets, and they generate a day one yield for the investor. And so we designed our fund as an evergreen open structure, and it provides monthly distributions to the sponsor that we've never missed over 7 years. And so you get current income day one. And what we found is when people get current income day one, they're more likely to double down. And so we haven't had any investors leave. 99.9% of the investors in our fund have doubled down and put more in as they've gained trust in the strategy and seen that those payments are backed by real performance of the company and real growth from the company and real assets, so they get comfortable.
Sure.
Did I answer that question?
Yeah, totally.
Awesome.
So if people, I know I've personally, especially now that I'm seeing more private credit stuff, I feel like now I'm targeted with ads. Now I'm getting ad targets. But what would separate you? Like, why would someone want to work with iFund Cities versus maybe another company that's offering supposedly offering the same thing?
Yeah, so for me, I think I'll answer that a couple ways. One, we were fledgling developers. So the assets in which we lend on, we've made a lot of the mistakes that most of the developers make in real estate. Although we generated returns there, we spent a lot of time since 2008 up until the last kind of 7 years when we started this in the investing landscape. So we understand the asset we lend on. Two would be culture. We have an incredible team of people that care about you and your investment and protecting your investment. And I would say three is the expertise of the team is vast. We have guys that have had 20-year Wall Street careers, kind of manufacturing mortgages, asset managing mortgages, lending in real estate. And I think that combination gives us the secret sauce to kind of really support our preferred developers that we lend to and protect our investors' money, because we've seen a lot of the mistakes. Over 2 billion loans originated.
Sure. And it is very special to be able to, be able to have access to a CEO and be like, hey, listen, like, can you walk me through this? Like, 100%. I don't know whatever level of trust, like how much more you can get than that.
It's a great point. I think also for the retail investor, like you said, they have access to the leadership team, and they're also closer to the same loan that they're buying through a big institution, through a money manager that's taking a fee. By investing directly in iFund Cities, you're much closer to the asset and much more control versus a large institution that you have no visibility. You don't know who's actually doing the lending on behalf of your money, right? And you're just kind of a pool of capital. We're a small enough fund where you're still going to have access. We still have some of the great reporting. We're fully institutionalized, but your investment dollars are much closer to the investment itself.
Sure. So what are some parameters that someone this could be hitting a lot of different people, but what are some of the parameters, maybe like what kind of investor they have to be, or maybe some experience that you would like them to have in order to come and meet with you to be somebody who is interested in the fund?
Yeah, so the fund's directed towards accredited investors right now. And so if you're an accredited investor and you're looking for fixed income returns, you believe in real estate as a fundamental asset that's going to continue to service investors in the United States, I think that's a great kind of place to start. I think that's what that's what I would say. Yeah,
that's what I was prompting you for.
Yeah.
And then
teeing me up, man. You're giving me layups here, guys.
And then lastly is just if someone was on the fence. I know we kind of hit these things, but what would be your sort of way to sort of bring them over to maybe give it a try or schedule a meeting? What would you say to them?
Yeah, I'd say if you look around at some of the most astute investors in the world, the Warren Buffetts, the Charlie Mungers that are the most kind of quoted, and you read Charlie's book, it's all about compound interest. So although a 10% double-digit return isn't sexy compared to maybe what you get advertised by a guru out there or your financial planner, it is over a period of time. And in somebody's life, there's always a period of time where they want that fixed income and they want that compounding interest. So you have the ability to defer those payments or take those payments current. If you defer those payments and you're a younger investor, that compound interest at 10% over time is going to hopefully achieve, great wealth for you, build great wealth for you. And if you're an older investor, you may not want the market's fluctuations when you have administration changes, when you have unemployment changes, when we have a natural disaster, right? There's a lot of fluctuation there that you may not want to stomach. And this is a great place to get a commensurate return with the market, not take equity risk, because senior debt has way more protections, and it allows you for a double-digit return that's fixed income for you when you're kind of aging out of your employment days. So that is who I think the investor is. I think it's, young or old, there's a great place for it, but it's a fixed income, and you're always going to have that pocket of money that you're going to take more risk with. That's not this. This is a non-sexy asset that's steady. It's predictable. And you have a proven sponsor. I think there's a lot of guys out there raising money that just aren't proven in the situation. I think we made a ton of mistakes, and we can pay that forward to our investors now. And we're excited to do that this year.
Sure. And sometimes predictability is what people need, especially in this market.
100%.
For sure. So how do people reach you if they want to get more information? What's the next place?
You call our marketing director, Tina Elmer, and she can help you get in touch with leadership, and we can walk through the presentation. We'll also put a link below where you can click. You can put some more information in there if you want to learn more. We can send you a tear sheet. We can send you the PPM, and we'd love to. I think at the end of the day, we really just want to have conversations and see if our platform could be helpful to your overall strategy.
Perfect. Well, thank you for your time, Ryan.
Appreciate it, Tina.